Welcome to Talk Tickers. Today, we are diving straight into the latest from Redwire Corporation's earnings call. We'll give you the quick rundown on the numbers and then really get into their strategic moves. Let's break it down.
All right, so first quarter 2025, revenue came in at $61.4 million. That's actually down, both from last quarter and year over year. They mentioned this was mostly about, timing revenue getting pushed to later periods, plus some delays snagging new contracts, especially stateside.
Okay, so top line down a bit. But what about profitability? I heard there was some movement there.
Yeah, definitely. Adjusted EBITDA showed a really big improvement quarter over quarter, went from negative $9.2 million last quarter to negative $2.3 million this time. Now that does include a, $3.1 million negative hit from what they call EAC's estimated completion adjustments, mainly tied to unexpected costs, labor and production for new tech on their iHab contract.
iHab.
Exactly. But even with that, the net loss also improved quite a bit, landed at a $2.9 million loss for Q1.
Okay, so revenue timing issues, but a clear step towards better profitability. How's their overall financial footing looking? Cash, liquidity.
Pretty strong, actually. They reported a record level of available liquidity, $89.2 million at quarter end. That's up almost 40% from last year.
Wow.
Yeah, mainly boosted by people exercising outstanding warrants.
Yeah.
Helped the cash position significantly.
And new business contracts.
They booked $56.2 million in new awards in the quarter. That gives them a book-to-bill of 0.92. So slightly less booked than billed, but backlog held pretty steady at $291.2 million.
And you mentioned the U.S. market had delays. Where's the strength coming from then?
A good chunk of that backlog, about 37%, is actually from their European operations. Seems like international is holding up well.
Interesting. So Europe's a key area.
Yet it appears so. They did acknowledge the U.S. side is a bit lumpy, as they put it. Delays tied to changes in leadership roles at places like NASA, SDA, government agencies, plus general budget uncertainties with new administration priorities.
Right, that makes sense. Transition periods can slow things down.
Exactly. But despite that, they sounded pretty optimistic about the future for U.S. national security, space, and defense budgets overall. They mentioned a pipeline of identified opportunities worth around $6 billion.
$6 billion. Okay, so potential is there, even with near-term bumps. Let's talk strategy then. How are they planning to capture that growth? They laid out 5 principles, right? Starting with picks and shovels.
Yeah, exactly. Think of it as providing the essential gear, the foundational products needed for space missions, kind of like selling picks and shovels during a gold rush.
Gotcha. Any recent examples?
Definitely. They highlighted a new contract with Thales Alenia Space. Redwire is providing 4 of these international berthing and docking mechanisms, IBDMs. These are for the European Space Agency's iHab module, which is like a habitation unit for the Lunar Gateway space station. So really fundamental hardware for living and working around the moon.
Okay, critical components. Makes sense. What's the second principle? Something about multi-domain platforms.
Right. This is about leveraging their tech across different environments, not just space, but airborne too. They're pushing their platform strategy. A good example here is a study contract they got from IS, the Israeli Space Agency, to work on the preliminary design for a mission called Arakis. It's looking for dark matter.
Interesting.
Yeah, and they're basing it on their Hammerhead small satellite platform, which is already flown. So using proven tech for new complex science missions shows that multi-domain capability.
Okay. And the third pillar, exploring the moon, Mars, and beyond. That sounds ambitious.
It is. They're really leaning into their space exploration experience. Just recently, they signed an MOU, a Memorandum of Understanding, with a company called ISpaceUS. The plan is to team up and go after commercial lunar missions, exploration science, both for NASA's CLPS program, the commercial lunar payload services.
Right, where they're already a prime contractor.
Exactly.
Yeah.
Big advantage there. And also pursuing private sector lunar customers together. So really pushing into that cislunar space.
Makes sense to partner up there. Number 4 was unlocking venture optionality. Sounds a bit like R&D bets.
Sort of, yeah. It's about pursuing breakthrough tech, things that could open up totally new markets. We saw them launch a new high-volume industrial crystallizer to the ISS for making pharmaceutical drugs in space. They think microgravity offers advantages. And they also announced a new partnership with Espero BioMedicines to fly even more drug development experiments up there.
In space manufacturing, biopharma. Okay, definitely future-focused. And the last one, M&A.
Yep, executing accretive M&A. They've done acquisitions before. And the big news now is Edge Autonomy. They've cleared all the regulatory hurdles.
Ah, yes. Edge Autonomy. When's that closing?
Expected to close in the second quarter of 2025, so pretty soon. And that's a major move set to really expand their reach.
We'll definitely circle back to Edge Autonomy, but first, thinking globally, how are things like tariffs and, the whole geopolitical situation affecting them?
It seems their global footprint helps a lot. Having manufacturing and supply chains in both the US and Europe gives them flexibility. They said they haven't seen major widespread price hikes from tariffs. They're handling isolated cases as they pop up. And interestingly, they actually think the current trade tensions might encourage more investment in U.S. manufacturing and also boost European space and defense budgets.
Ah, so potentially a net positive for them.
Could be, yeah. That's the thinking, potentially benefiting both sides of their business.
Okay. What about specific U.S. programs? They mentioned something called Golden Dome.
Right, Golden Dome. As part of the presidential budget request, Redwire is actively looking at how their capabilities, spacecraft, optical sensors from space, their digital engineering tools, could fit into that program's goals, which seem focused on threat detection and mitigation.
National security angle.
Definitely. And they highlighted having the secure facilities and clearances needed to play in that space.
Okay, let's dive deeper into that Edge Autonomy deal then. What's the strategic thinking and what kind of impact are they forecasting?
The strategy is pretty clear. Transform Redwire into a leader across multiple domains, space and air. Edge brings these combat-proven autonomous airborne platforms, drones basically, to the table. It's a big portfolio expansion.
And Edge is bringing its own business too, right?
Oh, yeah. Edge Autonomy already has a backlog of nearly $100 million, $99.4 million specifically. So significant existing business. Looking forward, they gave a combined forecast for 2025, kind of a what-if scenario if the deal closed end of 2024. They're projecting combined revenue between $535 and $605 million.
Big jump.
Huge jump. And adjusted EBITDA between $70 and $105 million. They'll give official updated guidance after the deal actually closes, of course.
Right. That really reshapes the company. We mentioned Europe being strong. What's driving that momentum specifically?
There's definitely a growing focus in Europe on strategic autonomy, boosting their own space and defense capabilities, less reliance perhaps on others. So missions like Arakis, which we mentioned, fit into that, plus general expectations of increased defense spending across European nations.
And Edge Autonomy helps there too.
Absolutely. Edge already has a presence in Europe, so that strengthens the combined company's position to capture some of that anticipated spending increase. Even if U.S.-Europe dynamics shift a bit, the overall pie in space and defense seems likely to grow.
Okay, but back in the U.S., you mentioned those program shifts and budget uncertainties. How concerned should investors be about the U.S. government side?
Well, they acknowledge the near-term dynamics, some strategy changes perhaps impacting things like the Gateway program, but the overall message was optimism for long-term growth in U.S. spending, especially in national security, space, and defense. They see the current award delays as temporary hiccups. And remember, Edge Autonomy brings strong credentials in drones, UAVs, which is a hot area for defense budgets.
Good point. That Edge acquisition seems really timely then. What about the Lunar side again, that ISpaceUS partnership? What makes that pairing work?
It seems like a smart combination of strengths. Redwire brings its prime contractor status on NASA's CLPS program, plus its deep expertise in subsystems, payloads, digital engineering, all that space tech know-how. iSpaceUS brings the lunar lander itself. So together, they can offer a really integrated and competitive package for those CLPS task orders and potentially for other commercial moon missions down the line. It differentiates them.
Creates a stronger bid, yeah. Let's talk cash flow. Q1 used cash, but what's the outlook?
They expect cash flow to improve quite a bit through the rest of 2025. As revenue from contracts comes in, milestone payments get hit, and those contract assets in the balance sheet decrease. They also signal that CapEx, capital spending, should stay moderate, so the picture should look better as the year progresses.
Okay. And those EAC adjustments, the cost overruns on iHab, is that a recurring worry or more of a one-off with new tech?
They framed it largely as related to the development phase, implementing new complex technology for iHab specifically. It's sort of the cost of innovation sometimes in this sector. They emphasize their balancing growth and profitability and expect these kinds of things to stabilize as programs mature and shift into actual production phases. So less likely to see big swings like that on mature programs. Got it. Development pains. Finally, looking at their bidding pipeline and margins, what's the trend there? Are they aiming higher? Yes, definitely seems like they're aiming higher up the value chain. Bidding on bigger full mission programs, sometimes as the prime contractor, like with CLPS, they didn't give specific margin numbers, but the commentary suggested a clear desire for better margins on new bids compared to the last 12 months.
So a mix of work then.
Exactly. The pipeline includes both their traditional, likely higher margin component and subsystem work, but also these larger programs. Those might have lower percentage margins, but much bigger absolute dollar profit. And national security is becoming a bigger piece of that revenue mix overall.
Okay, that paints a pretty comprehensive picture. So stepping back, what are the key takeaways for, someone tracking Redwire?
I think the main thing is seeing this ongoing transformation. They're clearly positioning themselves in key growth spots: space infrastructure, national security, and now significantly autonomous systems with Edge. That Edge acquisition is really the big story right now. It creates this potential powerhouse in multi-domain capabilities, space and air. Lots of synergy potential there.
And the global footprint helps too.
Right. The dual focus on the U.S. and Europe offers diversification, some resilience if one market hits a speed bump. And don't forget those venture bets, the in-space manufacturing, the biopharma stuff. Those are longer-term plays, but potentially huge upside.
So what to watch going forward?
Definitely keep an eye on contract awards, especially getting those delayed U.S. government deals flowing again. Watch the progress with ISpaceUS on the Lunar front. And critically, how smoothly they integrate Edge Autonomy and whether they start hitting those combined financial targets. That integration is key.
All right, perfect summary. Now let's shift gears slightly to our This Is Not Financial Advice segment. Time for a creative, maybe slightly wild trade idea based on all this.
Okay.
So Redwire's bulking up, right? Space infrastructure, proven track record there. And soon, combat-proven autonomous airborne systems via Edge Autonomy. They're becoming this unique multi-domain player.
Interesting angle.
So here's the thought, purely speculative, of course. What about a pairs trade? Go long Redwire, betting the market hasn't fully priced in the combined power of this entity across both space and defense tech.
Okay. Long Redwire. And the other side.
Maybe short a pure-play space launch company. The thesis being perhaps that the build-out of space infrastructure and surveillance capabilities, Redwire's expanded sweet spot, might temporarily outpace the raw demand for just launching satellites in the medium term.
Infrastructure versus launch demand imbalance.
Exactly. So you'd potentially capture Redwire's synergistic upside while hedging against a possible temporary slowdown or bottleneck in just the launch segment. Capitalizes on Redwire's broader play.
It's definitely a thought experiment, capturing a specific dynamic in the evolving space economy.
Totally. But remember, everyone, this is just kicking ideas around. Absolutely not investment advice. Do your own deep research. Talk to a professional. This is just food for thought.
Couldn't agree more. Due diligence is paramount.
Okay, so that wraps up our deep dive into Redwire Corporation's latest earnings call. We've hit the financials, the 5 strategic pillars, the big Edge Autonomy acquisition, market dynamics.
Hopefully this gives you a much clearer picture of where Redwire stands today and where they seem to be heading.
What are your thoughts on this strategy? Does the move into autonomous systems make sense? How do you see this dual space and air focus playing out? We genuinely love to hear your take.
Absolutely. Join the conversation.
Thanks so much for tuning into Talk Tickers for this earnings breakdown. We'll catch you next time for another Essential Market Deep Dive.